Hey guys, it's Ray Campbell at Fairway. It is Tuesday, June 20th, and of course, everybody was closed yesterday for the holiday. Hope everybody had a good long weekend and is back ready to get things started this week and have a productive week. So we've got a lot of different things going on this week, and most of them all good things, or we expect them to be good things anyway. Lots of housing numbers that are going to be coming out. We should see we did see this morning. We saw housing starts from the builder side. And that's kind of where everybody's been focusing, right? Because, well, they can't seem to find a home that's for sale already, and there's very limited inventory, very tight inventory, and so a lot of them is going to the builders. But here's one key thing that you can help your buyers understand what's going to happen. Everybody's waiting for interest rates to come down. They want home prices to come down, all of that. But here's another piece of information you can give to them. Well, housing starts on the builder side, they are up. They're building more homes, and that's a good thing. We need it. However, at the pace that they're at about 1.5 million homes, that they're building, it is not enough to basically keep up with demand, right? So housing formations, so people getting married, having kids, and needing to get into a home or purchase something, is happening at a faster pace than the builders are able to create homes for these people to buy. So the housing tightness that we're seeing is still going to continue for some time, probably years actually. So as far as the builders being able to bring up the amount of supply that's available to our home buyers, and that's going to help keep the home prices high. So good news for sellers, your home's value is going to stay and it's probably going to appreciate some, but for the people who are on the fence waiting for the home prices to come down, it's not going to happen. We already know that. We're seeing that. There are some outlying areas and some different things to consider. Every market and every little MSA or zip code or whatever could be a little bit different. Price ranges are going to be a little bit different, but overall, home prices are going to stay high, and the lack of inventory, especially even on the new construction side, is going to help those home prices stay high. So keep that in mind as you're talking to your people about, whether they're on the fence, they want to wait, they want the market to cool down, they want home prices to come down, they want interest rates to come down. Interest rates are projected to come down, but of course it's a timing thing, right? So we don't know exactly when, and if we do some numbers, then you can see that it's going to be, kind of a drawn out process. It's going to come down slowly. Another thing that's going on right now, of course, is builders are providing incentives, right? So we all know that when you go buy a new home, they have incentives. Some of them are tied to a lender, some of them not, just depends. But those incentives, a lot of times what people are doing is using that incentive from the builder to pay for temporary buy downs. And so that's going to pull the buyers from the resale side over to the new construction side. And so for you, as on the listing side, this is something you can use, of course, temporary buy downs. It's been a big conversation for a while now. You can have the seller negotiate part of that, and you can advertise some of that where the seller's going to pay for 1% lower in interest rate for 12 months or something like that, where you use seller paid closing costs to purchase and pay for the buy down for the buyer. So that's something that you can do on each listing. If you would like to see what we do as a mortgage coach, total cost analysis, most of you have probably already seen it, but we can put some different estimates side by side. We can show to the buyer, this is what it looks like with an interest rate at this, and your loan structure, 10, 20% down, whatever that number is, and with a temporary buy down, this is what it looks like as well, and this is how it works. We can provide that link for you, and then also we can provide another one for the seller showing the difference in the payment as far as lowering the price and paying for a buy down net to the seller, and then also what it does as far as an incentive to the buyer to help them understand why they're doing it, to help them get their home sold. So again, long-term outlook for interest rates, they are expected to come down. Of course, we've got some things to work out from the banks because they're dealing with their balance sheets, so we've talked about that previously. But as we work through that, interest rates are starting to make their way, and it's going to take a little bit of time, but they're going to figure it out on the bank side, and the inflation numbers are all coming down where we want them. So that is going to bring down interest rates. They are going to be coming down. It's just a matter of timing. So we don't want anybody to wait and miss out on buying the home, of course. There's lots of different strategies that you can use to help with that. Temporary buy downs, of course, being one of them. And if you need or would like to see some of those mortgage coach estimates that you can provide to your seller or to your buyers, let me know and I can get that for you. And as always, if you want to share this video with any of your prospective buyers, feel free to send it and forward it to them, and I'll be happy to talk to anybody that has any questions that you think that we could benefit and help you maybe convert somebody over to understand that now is the time to buy rather than waiting, because it's going to cost more money overall. So if you need anything, always feel free to reach out to us, and we will talk to you again at the end of the week. Have a good one.